Welcome to the Deep Dive. We're the show that really tries to cut through all the noise and get you those critical nuggets of knowledge.
That's the goal.
And today, we are plunging into something that's generated, well, years of buzz, hasn't it? Tesla's robotaxi promises.
Years and years.
Right up to that recent June 2025 launch event in Austin, Texas.
Mm-hmm.
So for you, our listener, the mission today is pretty clear.
Mm-hmm.
We've heard the hype, the big claims, but what's the actual verifiable reality of Tesla's robotaxi service?
Mm-hmm.
Especially if you look at it like a serious investor.
Yeah, exactly. And, this whole deep dive, it was actually sparked by this really interesting Reddit thread, went viral on stocks.
Oh, yeah, stocks. Okay.
Yeah.
So serious discussion territory.
Right, not just tech fan stuff. This was an investor, someone apparently shorting Tesla stock, who laid out some really detailed, pretty sharp criticisms about this robotaxi launch.
Okay.
The focus was all on, verifiable claims. What does this really mean for the stock, for the market implications? It's about getting past the narrative.
Okay, yeah, let's unpack that then. Our purpose here is really to dig into that skepticism. Take the promises we've all heard for years, sometimes, and put them right next to the current reality, the stuff we can actually verify.
And then connect the dots. What does it mean for Tesla's valuation? And crucially for you, listening in, trying to make smart investment decisions based on clear info.
It's kind of amazing, isn't it, how much of a company's value can be tied up in these future ideas, these visions?
Absolutely. And the question is, are those huge projections still grounded? Or is there, a bit of disconnect appearing now with the operational details?
Right. So let's start with the big one. The launch itself, this robotaxi service rolled out June 22nd, 2025 in Austin. What were the specifics? What jumped out?
Well, first off, the car is being used, standard Model-wise, not that, futuristic cybercab concept you've all seen pictures of.
Okay, so regular cars.
Regular cars. And it was invite only, stuck inside a specific geofenced area, only running 6 a.m. to midnight.
Limited hours.
Yeah, and they even mentioned service might be limited if the weather gets bad. But the really big thing, the contradiction that makes you go, hang on. Despite Elon Musk talking up fully driverless robotaxis for years.
Yeah, constant.
And even saying, just a month or two before, that cars would be in the wild with no one in them by June.
Right.
The Austin pilot explicitly requires a Tesla safety monitor.
Right.
Sitting in the front passenger seat every single trip.
Wow. Okay. A human safety monitor.
Yep, human in the loop.
That feels significant. I mean, that directly contradicts the core promise, doesn't it?
It really does.
And like you said, this isn't a new promise he just made. He was talking very confident about a 2020 debut way back in 2019.
Oh, yeah.
It's basically been next year, every year since, 2016?
Pretty much, an annual tradition.
So what does this human-in-the-loop reality right now do to Tesla's credibility with investors? Because that pattern of, let's say, optimistic timelines is pretty clear.
It's absolutely critical for credibility. I mean, think about the analyst projections. You see firms like Wedbush saying robotaxis alone could push Tesla's market cap over $2 trillion by the end of next year.
$2 trillion.
Those numbers are built entirely on the idea of full, unsupervised autonomy. That's the foundation.
Right.
So when you get delay after delay, and now this clear reality of human supervision that just flies in the face of those promises, it shakes that foundation.
Undermines the whole projection.
Exactly. The original Reddit poster, the one we mentioned, they speculated, is this more about optics, smoke and mirrors for the public maybe, rather than a real step towards driverless.
And seeing a safety monitor required.
It definitely adds weight to that skeptical view, doesn't it? If the driverless part isn't actually driverless, how can that huge chunk of predicted market value possibly hold up?
It sounds much more like, I don't know, a supervised testing program than a commercial service.
That's certainly how it looks on the ground right now.
Okay, so we've got the human element contradiction. Let's dig into the tech itself. Tesla's famously stuck with its vision-only system, just cameras. But what's the wider industry view on that, the expert consensus? Because this seems, crucial for the long term.
Yeah, this is a really key point. The broad consensus, and we're talking researchers at top universities like MIT, Stanford, standards bodies like the IE, even safety studies from major insurers like Swiss Re.
Okay, serious players.
They strongly favor multi-sensor systems, especially systems that include LiDAR.
LiDAR.
Right.
Explain that quickly for folks maybe less familiar.
Sure. LiDAR basically uses laser pulses. It builds this incredibly detailed, real-time 3D map of everything around the car. It gives a really robust, a sort of redundant view that cameras alone can sometimes struggle with.
Okay.
And the overwhelming academic view is that camera-only systems, they're probably not going to get us to truly unsupervised, drive-anywhere self-driving.
Why not? What are the specific weaknesses?
Well, vision systems, cameras, they struggle most in bad conditions. Think heavy fog, pouring rain, snow, or even just low light like dusk or nighttime driving. These are exactly the kinds of situations where LiDAR really shines because it doesn't rely on visible light. It provides that solid all-weather perception.
And we've seen real-world issues, haven't we? The NHTSA investigation.
Exactly. The National Highway Traffic Safety Administration is looking into, 2.4 million Teslas? Because of failures with FSD, their full self-driving systems, specifically in low-visibility conditions.
And that's linked to actual crashes.
4 crashes, 1 fatality mentioned in those reports. So yeah, it's serious. And you've got industry analysts like Navigant Research putting Tesla basically at the back of the pack for autonomous driving tech.
Back of the pack. Wow.
They even said level 5 autonomy, that's the holy grail, full automation, anywhere, anytime with vision only is, quote, unlikely to ever be achievable.
That's pretty blunt.
It is. It's a strong statement from industry watchers.
Okay, so let's contrast that. You mentioned competitors taking a different path.
Yeah.
Volkswagen.
Right. Take VW. They just unveiled their ID, Buzz AD Robotaxi. Also, in June 2025, funnily enough.
The electric van thing.
Yeah, the cool retro-looking van. But this isn't just a concept. They're calling it a production-ready SAE Level 4 autonomous vehicle.
Level 4, that means.
High autonomy. The car handles pretty much everything itself within a defined operational area, like a city or a region, no human needed for driving in those zones.
Okay, and its sensor setup.
It's completely different from Tesla's approach. It's got, get this, 27 sensors total.
27.
13 cameras, 5 radar sensors, and critically 9 LiDAR sensors.
9 LiDARs.
Yes, specifically the Innovis 2 units. 3 are long range, 6 are short to mid range. It's designed for really comprehensive 360-degree coverage, redundancy built in.
And they have partners lined up.
Big ones.
Huh?
Mobileye for the self-driving system core, Uber for deployment here in the US, and their own MOIA division for Europe. Series production is slated for 2026.
Okay, so from an investment angle, what does this divergence mean? Is Tesla's insistence on vision only turning into a serious competitive disadvantage?
Well, you have to ask that question, right? You've got VW, and others are heading this way too, going with this multi-sensor approach that aligns with what most experts think is needed for true level 4 safety and reliability.
Seems pragmatic.
It does. It feels like a safety-first, belt and braces approach. Tesla sticking to vision only, especially given the known limitations and the FSD issues. It could genuinely limit how far they can actually progress towards real unsupervised autonomy.
So it might cap their potential.
It could absolutely hinder their ability to compete head-to-head with companies using more robust sensor suites, especially when it comes to actually launching and scaling commercial services. It looks like a potential drag on future market share, maybe even long-term viability in this specific robotaxi race.
Okay, let's shift from the tech to the actual operations, the reality on the street. Let's talk Waymo.
Ah, Waymo, yes.
Because they're not just talking about robotaxis.
Yeah.
They're actually doing it, right?
Yeah.
What are their numbers looking like?
The numbers are kind of staggering, honestly. Waymo is already providing over 250,000 paid autonomous rides every single week.
250,000 rides a week?
Yep. Across 4 big cities now.
Yeah.
Phoenix, San Francisco, LA, and, ironically, Austin, too.
That's Austin as well, okay.
They've completed over 4 million paid trips overall, and crucially, this is at SAE Level 4. Truly driverless. No safety monitor needed in the vehicle for the public rides.
Right. Fully driverless. So how does Tesla stack up against that?
Well, the contrast is stark. Tesla right now.
Yeah.
0 commercial robotaxi operations. 0 paid rides.
0.
0. If you look at industry rankings like the ones from Guidehouse Insights, they put Waymo right at the top, number 1 for tech maturities, scoring like 85.6 out of 100.
And Tesla.
Dead last. Number 16 with just 34.7 points.
Ouch. 16 out of 16.
Yeah. And operationally, Waymo has the full driverless permits they need in California, Arizona, Texas. They have established commercial services. They're expanding.
And Tesla's permits in Austin.
Just basic fleet management permits from what's reported. No driverless permits, no commercial permits to charge passengers. Experts reckon Tesla needs, quote, several years just to get to the point Waymo reached commercially back in 2020.
Several years behind.
Wow.
So connecting this back to the investment picture.
Yeah.
What does this massive gap, both operational and technologically, mean for Tesla's place in the robotaxi market? And maybe more importantly, for those huge revenue projections backing its stock price?
This gap is, frankly, a colossal red flag for anyone betting on Tesla dominating the robotaxi space soon. Look, this market isn't just about cool tech demos.
Right.
It's about deploying safely at scale, navigating regulations, and actually generating revenue from real customers. Waymo is doing that. They're collecting fares, gathering tons of real-world data from paying users, refining their service. They have market traction.
They're proving the business model.
Exactly. Tesla having zero commercial operations means all those projected robotaxi revenues that analysts have factored into Tesla's stock price, they're purely hypothetical right now.
Just air, basically.
Based on the current reality, yeah. They seem very, very far off. And that directly undermines the investment case for a huge chunk of Tesla's valuation, which depends entirely on those future theoretical cash flows.
Which brings us neatly to that valuation, the elephant in the room, as you said. Tesla's market cap, over $1 trillion at points.
Yeah.
$1.1 trillion even. It's just mind-boggling for a car company.
It is, but you have to understand why it's so high. And the analysis suggests it's largely driven by this robotaxi speculation, not by their current car business fundamentals.
Okay, break that down.
Well, look at Morgan Stanley's analysis. They valued Tesla's core electric vehicle business at only about $75 per share.
Yeah.
But the stock price has been trading around, what, $326?
Right, much higher.
That implies this massive speculative premium, somewhere between 75% and 90% of the entire market cap, is purely based on autonomous technology that hasn't been delivered commercially.
75 to 90%, just for the robotaxi dream.
That's what their analysis suggests. And ARK Invest, another big Tesla bull, also projects something like 90% of Tesla's future value coming from robotaxis that, well, don't exist yet in that form. Goldman Sachs is way more cautious, estimating maybe 2,500 robotaxis by 2027.
That's a tiny number compared to the hype.
Vastly different from the hundreds of thousands narrative we sometimes hear from Tesla.
So let's put this speculation against the recent financial reality. You mentioned fundamentals. How have they been doing?
Not great, actually. Their 2024 net income, down 53%. And vehicle sales in the first quarter of 2025 dropped 13%.
Okay, so profits down, sales down. But the stock price relies on this massive future growth from robotaxis. What happens to shareholders if those robotaxi promises keep getting delayed, or if this safety monitor reality persists?
The implications are, well, potentially severe. When so much value is tied to something unproven, the whole structure is incredibly fragile. Look at the PE ratio, price to earnings.
Yeah, you mentioned that earlier.
For Tesla, it's been fluctuating between, say, 158 and 181.
Which is huge, right?
Astronomical. Compare that to the traditional auto industry average PE, which is usually somewhere between 3 and 25.
3 to 25 versus over 150.
Right. Even compared to the broader tech industry average, which is around 37, Tesla's is way, way higher.
So what does that high PE actually mean?
It means investors are pricing in absolutely immense future growth. Growth that seems largely dependent on these robotaxi dreams becoming reality, and soon. If those dreams falter, if the timelines slip further, if the tech doesn't deliver true autonomy, shareholders could face a really significant, potentially painful re-rating of the stock back down towards Earth based on its actual current earnings.
Yeah, a reality check, basically.
A potentially very harsh one. That huge premium is built on hope, not current delivery.
This leads perfectly into the psychology of it all. Investing in a stock like Tesla. That original Reddit post you mentioned, the short seller. They identified 3 types of Tesla investors. What were they?
Yeah, it was an interesting observation. They basically said there are, 1, investors who see the reality, the challenges we've been discussing. 2, the blind believers who dismiss any criticism. And 3, traders who are just playing the game, exploiting the beliefs of the second group for short-term gains.
Interesting breakdown. So how should you, listening now, as a rational investor, try to evaluate Tesla's robotaxi claims going forward, given this sort of complex mix of belief and reality?
I think a rational investor has to be ruthless about separating the narrative, which is incredibly powerful with Tesla, from the cold, hard data.
The verifiable stuff.
Exactly. You have to ask, is Tesla starting to behave more like a meme stock, where sentiment, social media buzz, a really dedicated fan base maybe starts to overshadow the fundamentals, the technical hurdles, the competitive landscape.
Right.
When a company's value leans so heavily on promises yet to be fulfilled and on a very charismatic leader, it becomes less about traditional investment analysis and more about, well, faith and speculation.
So you need to decide what game you're playing.
Precisely. Are you investing in a proven business model generating profits now, or are you betting on a future vision? And how much risk are you comfortable taking on that vision?
That brings up that classic challenge, market timing. The Reddit poster's own experience is telling. Shorting Tesla, believing it's overvalued based on fundamentals, but losing money anyway. Because, as they put it, the market can remain irrational longer than you can remain solvent. What does that tell us about trying to time the market with a stock like this?
It's the ultimate investing paradox, isn't it? And it's humbling. You can have all the fundamental analysis pointing toward overvaluation, the PE ratios we talked about, the reliance on tech that isn't ready, the competitive gaps.
All the logic on your side.
Right. But market sentiment, especially when fueled by such a strong narrative and a passionate community, can keep a stock price elevated, sometimes stubbornly so, for a very long time. Way longer than seems logical.
Making shorting incredibly dangerous.
Extremely risky, as that poster found out. For long-term investors, it means you need incredible patience. You need conviction in your own analysis, and you have to resist chasing the hype or feeling like you're missing out FOMO. It just highlights that markets aren't always rational, especially in the short term. And trying to predict exactly when sentiment will shift, it's incredibly hard, maybe impossible. You have to decide. Are you betting on the fundamentals eventually winning out, or are you trying to ride the wave of the narrative?
Okay, so let's pull this all together. We've really dug into this gap, haven't we? Between the huge robotaxi promises from Tesla and the, let's say, more grounded reality of that June 2025 Austin launch.
Yeah, the human safety monitors, the limited scope.
Right, and we've looked at the competitive scene. Waymo actually doing driverless rides commercially, VW preparing a level 4 vehicle loaded with sensors, while Tesla sticks to vision only, which many experts question.
And the operational lead Waymo has, it's just immense.
And critically, we've talked about the valuation. How much of Tesla's trillion-dollar-plus market cap seems built purely on this robotaxi future that still feels pretty far off and uncertain?
A huge percentage, according to some analyses.
Ultimately, what this deep dive really seems to show is that in this incredibly fast-moving world of autonomous vehicles, promises, perception, narrative, they can inflate valuations to really dizzying levels.
They absolutely can. Even when the underlying reality, the actual implementation, is lagging pretty far behind.
But it also suggests that eventually, those verifiable details, the tech working reliably, the commercial deployment, the competition, that's probably what determines long-term success, not just the initial bold claims.
History suggests that's usually how it plays out. Yes, execution matters.
There's a final thought for you, our listener. As you look at the next big tech announcement, the next potentially world-changing investment opportunity, how much weight do you give to the visionary leader's grand promises versus those, maybe less exciting, but verifiable in the weeds details? The implementation facts, the competitive realities.
It's a really crucial question to ask yourself. Getting that balance right could make all the difference.